So what you have to do is you have to create a simple strategy, stay liquid where you need to be liquid.
I want to dive in maybe some of the biggest secrets, because our show is mostly high net worth individuals selling businesses or real estate or other highly appreciated assets, and they know about capital gains tax, they know about 1031 exchanges, they may be learning about the Deferred Sales Trust for the first time, which is what we specialize in. So I'm curious, Mike, what's some of the biggest secrets for high net worth individuals to keep it simple, right, and not make mistakes with the wealth that they've accumulated?
Yeah. Okay. Well, one of the things is, speaking of business, I just transacted a business transaction for our last family business, and it was a joy of my life because, again, I said I picked good parents, and I did. And oh, by the way, my mom used to get up at 5 a.m., make me and my brother a full breakfast, and then put us on the way to the construction job. And then she would go back to bed. So that's how good my mama was. But anyway, when we got the proceeds, and gonna work with the proceeds, there's no magic to really investing when you're looking at the security markets. You got cash, you got bonds or fixed income, and you got equity or stock. And then from your point of view, you got real estate, right? Which is basically an equity asset, but it has some unique characteristics. But it's a capital asset and it's an equity asset, right?
Correct.
So the point is don't get bamboozled by, I got a better mousetrap, I can predict the markets, I can time you in and out, I'm worth a 2% fee and then 20% of your upside. I won't do it, right? Keep it simple. Spread it out. Who predicted last year? Not one Wall Street person not one had coronavirus in their annual reports. And yes, in their predictions for the year. And yes, it was already known by the time those predictions were made. Was it not? It was already through China, right? So what's going to happen this year now with this election? There's so many different scenarios there are. So what you have to do is you have to create a simple strategy, stay liquid where you need to be liquid. Now, real estate people can really understand that. High net worth people can understand that. You need to be able to get a dollar when you need a dollar without liquidating an asset that you feel is valued at a dollar at 50 cents. You know what I'm saying? So you have to have liquidity facilities. Higher net worth people, they might be lines of credit, they might be asset-backed loans, or it might be money in the bank. Second, you need to have money that's going to grow for the future if you want to grow. And if you don't want to grow it, I'm like, what are you doing? You're letting somebody else grow it. So why do you love the bank so much? You want them to use your money? They give you nothing. They lend it out of 5. Where's your return, right? So I am biased towards people sort of growing their wealth. I think it's like riding a bicycle. You can't stand still on a bicycle. You got to go forward, right? If you certainly don't want to go backwards. And so I think, that's it. Keep it simple. If you keep it simple, you use stuff that's easy to understand. You understand your investments. Like the strategies you use, they're completely understandable. They're understandable. They're transparent. You know what's going on. And then you just keep an eye on the dollars, right? Who's getting paid for what and what are they doing to earn it? And there you go. And you know that nothing's too good to be true. And finally, the last thing I'll say, and this is to everybody, don't believe in magic. If government stimulus was so great, we'd be speaking Russian or Spanish right now, right? The reason why they went from Cuba to the United States and not the United States to Cuba, right? Okay. Dollars chasing goods are going to give you inflation. So you got to keep it simple. Second thing is don't fall for it. Like, something like out there right now, there's stuff that's really high priced. Some stuff that's really high priced are very good businesses, but they might not be worth that price. So if you invested in them at a high price, you may not have returns for a while, but the business might stay solvent. And there's other stuff out there that's akin, in my opinion, to the Dutch Tulip Mania. And if you don't know what the Dutch Tulip Mania is, you really should look it up. And you can see how speculative excesses can really bubble up. There's a great book by John Kenneth Galbraith called Crashes, Excesses, and Other Manias. And he wrote it in the 50s, and it's always been in print because every 10 years there's another speculative bubble that makes it a popular book. It's very well written, and if you haven't read it, you should read it. It's a lovely book with a lot of truth in it. And then the last thing is don't fall for scams. See, what happens is we know that people get scammed by financial scammers. We got them on our telephones. They call up the IRS. It's terrible. They're stealing money. Wealthy people, that happens to wealthy people too. We don't hear about it because they're embarrassed and they absorb the loss. but the losses are a lot bigger for wealthy people. They just simply absorb the losses because we tend to think, and Galbraith is good at this, in America, if you're good at something, you make money, right? You tend to. And so then we tend, since it's denominated money, we tend to think people with money are smart. No, they might just be good at hitting a baseball. They might just be good at this. There's no reason to think that they're generally smarter than middle-class people, right? They've just focused and done well. So just be very, very careful. In investments, one thing I call them are genius attacks. You don't want genius attacks. Genius attacks was a financial crisis. Everybody thought, oh no, all assets couldn't decline at the same time, lever it up, there won't be a problem. Yeah, no problem.
Beautiful, Michael. Well, that's so much there and so much to unpack.